What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at ARM Holdings stock, ticker symbol ARM, on a variety of time frames in anticipation of the next trading day, Tuesday, February 20th. Well, ARM stock on Friday finished the day down about 4%. Guys, up here it's giving a quote of 51 with not available data. Just go ahead and ignore that. That's just a data source error. This, of course, 127.65 is going to be the price. So don't freak out when you see 51 bucks here in the platform. But that doesn't affect us taking a look at the name. So let's do so, starting here on the 1 minute chart. First of all, don't forget the market is closed on Monday. Okay, and we'll be back with regular hours on Tuesday. So it's going to be a great weekend here. It already has been, of chart analysis here on the Roensch Capital Charts channel. Be sure to subscribe if you have not done so already. I'm posting daily videos. So here on the 1 minute chart, you guys know these videos are primarily geared toward the day-to-day perspective. We're really looking at Tuesday, but I'm a scalper. It's what I do every day. I'm a scalper at heart. So looking at the 1 minute, I always like to start by looking at potential intraday opportunity that we saw on the last trading day that we can look to potentially replicate in the next trading day, to maybe generate some revenue around a core position. So looking here at ARM stock from Friday, if we zoom in, we of course saw this big sort of like opening drive pump and then fade. Okay. Now, ARM stock, I would say, is in play just because of the bigger macro move that we've had going on in this name. However, there were a lot of other stocks that were potentially more in play. Now, what do I mean by that? No, that's not a dig on ARM stock. You have to understand what I mean by that. What I mean is in play stocks give scalpers and intraday traders much more, much more significant edge over the random chop that 99% of the market is each and every day. If you took the best traders on the planet and just said, okay, you can only trade Apple every single day, I'll be the first to admit, probably just lose money every day. Okay, there is only edge in very specific setups that have edge even when a stock isn't in play. But most of, at least my playbook and the majority of traders' playbooks, most setups in that playbook only have significant edge on stocks that are in play, okay, that are moving elevated relative volume, a lot of eyeballs on that particular day for whatever reason. So looking at ARM here intraday, for example, one of the setups that doesn't require the stock to be in play is a setup I developed called the repeat offender. There were no setups of that nature here on ARM from Friday, okay? But the fact that it is still relatively in play, I would just like to point out, because the bigger picture here that we've seen in the last, while now on ARM, you are going to have some traders that were trading this pullback. To be more specific, this kind of pullback is another setup that I developed. I call it the breathe and go. It's a very specific setup. It requires, again, typically a stock in play, a high volume pull away. In this case, it happened to be the upside. A low volume pullback into a self-fulfilling prophecy, in this case, the 20 EMA. And then a higher volume pull away. Okay, it's a quite a high probability scalp with significant edge. Unfortunately, we're heading right into volume weighted average price. It's below volume weighted average price, and you're scalping to the long side. For me, it's just as much as tempting as it is to take this setup. There's not nearly as much as edge here as there would be on a stock with high elevated RVol, which ARM, has been a lot in the past week. Is up 5, 10, 20, 30%, a lot of volume comparatively speaking, and is above volume weighted average price because this would be a long scalp, obviously. So listen, those are two backbone setups for me, and the reason I point that out is because I expect that we're going to see ARM in play quite a bit here in the near future, so I'm just keeping an eye on that. By the way, that scalp, the breathe and go, it of course is also relevant to the short side. If you decide to look at that, maybe add it to your own playbook. But let's move on now. Let's get more bigger picture heading into actually Tuesday. What I want to look at here is the volume on the 5 minute. Remember, what I'm always looking for is big volume spikes that correlate with very obvious moves in stock price. So you see here we have a few, really. Bulls, understand that on this fade off the open, we saw a pump and then a fade off the open here. we did see a volume increase to the selling side. Okay, bears are going to look at that. Just bulls understand the psychology. I know it doesn't feel good, but you have to put that aside. Understand that the bears are going to look at that and say, we like that. That's a really good thing to see. Okay, but also, bulls, we did have this little upside tick in the chart with a very, obvious volume move, and then into a power hour, we saw that upside move in the stock and big upside volume. Okay, so I would call this chart a net neutral here from Friday, but there is some good data that we could pull out. Heading into the close, I would say that's a positive thing to see if you are a bull. Just one factor of many, though. Let's move on now to the 30-minute and start getting really contextual with the day-to-day self-fulfilling prophecy indicators, levels that I pay very close attention to and will be on Tuesday here. So looking here at ARM on the 30-minute, you can see that this 200 period is very much so in play, and honestly, so is the 50. We're within kind of a tight channel. So if I'm a bull looking at this chart, here's what I want to see. I want to see the 200 hold as really strong support, ideally crack up above the 50 and reclaim that as support. All right. And if I'm a bear looking at this chart, any test of the 50, I want to see reject hard. But really, my ultimate goal, looking at the 30-minute in particular, is breaking downside hard through that 200 period. Okay. Let's take a look at the 4-hour. You can see that these self-fulfilling prophecy moving averages, not quite as immediately relevant. I mean, you can see that 50 period is about a 13-14% move to the downside away, and that's because it's a longer time frame, and ARM has had a significant move as of late. Okay, so looking at that, here on the 4-hour, we really have to get more contextual. What I would want to see if I'm a bull is not necessarily a retest of the 50 period and a hold, because it's 14% to the downside, right? It's not weighing out, right? What I really want to see is that 50 period aggressively continuing upside, getting feet up under the recent move. A psychological area of potential support is really what I'm after. And if I'm a bear, ideally I'd want to see this 50 period flatten out, leave a gap in between there, and then see the stock fade down and break downside through the 50 period. All right, that's what I'd be looking for here on the 4-hour in particular, if I were looking at this with a bearish perspective. Now, let's take a look. This is the most important chart of all, and that's the daily. Why is it most important? Because everyone's watching it, right? Now you can see, well, let's actually zoom out a little bit. You can see that, that 50-day is way down below $80 a share and not immediately relevant. So there's nothing up here, right? What are we looking at? When it becomes this bear, the correct thing to look at is the most obvious psychological story. Okay? So where does that leave us? Well, I'm really looking at 120 to 125. And if I'm a bull, I want to see that hold. But really, each round number is kind of like a new target. I'm talking 130, 135, 140. Ultimately, 150 is going to be a huge psychological level. And then, of course, you have the high of 164. So really, if I'm a bull looking here, I'm just worried about holding 120 to 125 and then, kind of stair-stepping our way to the upside. It doesn't have to be extremely fast, right? We made a huge move. I'd like to see it preferably hold. That means moving upside continuously now, in ideally what would be a sustainable manner. All right, but if I'm a bear, it gets really, really simple. Crack downside below 125, break down below 120, and start making our way back down toward $100 a share. If you're a bear, $100 a share is really your goal. Okay, you want to see a test of that and a crack back down into 2 figures is really what you're looking for. Bulls, I know it doesn't feel good to talk about it. That's not the point. All right, this is the big leagues, okay? Understand that's what the bears are looking for. It's arguably more important to understand the psychology of the enemy more than the psychology of your own side. So let's finish out here by taking a look at the bias in the options chain from Friday. Okay, so we see 315,000 contracts. That's a really good sample size. We want as much volume as possible because that gives us better data. Okay, 191,000 of those were calls, 123,000 of those were puts. Rather heavy call side bias here from Friday as we position heading into Tuesday. Now the short-term speculators. Let's break it down by time frame. The 0 to 20 delta 78,000 calls, 57,000 puts. Short-term speculators have a slight call side bias. All right, now you go every single delta range. That's going to be out of the money, at the money, and in the money. On average, short-term, mid-term, and longer-term perspective, all of them here on Friday leaning bullish. Understand? Number one around here, always manage your risk. Okay, the options traders can, of course, be wrong. Hey, listen, if you got value out of that video, please subscribe to the channel. I'm uploading daily videos again. I greatly appreciate it, and I'll see you in the next one.